All right, let's get another market opinion. Ritu Arora, CIO of Canara, HSBC, OBC Life Insurance joins us on the show right now. Ritu, what's your near-term view on the market given the range that we've been in? And, do you think the support at 5,500 would hold or the market would go lower?
I continue to believe that market will be range bound. At this cost of sounding repetitive, I think I have more than once shared this with you now. But I don't see the market going anywhere because underlying internal fundamentals of the market, be it domestic or global, continue to remain concerning. The valuations, at the other hand, are reasonable, and hence we'll continue to see this tug of war between a little correction and then followed by a small upside. I do not see it breaking the range on either side, but I would think the bias would be bearish rather than bullish going forward over the next couple of months, and there'll be a lot of news-driven movements, be it in stocks or be it in general sectors.
How have you changed your portfolio strategy over the last 6 months, given the volatility then?
We prefer earnings growth now clearly because that's the only fundamental that can be measured and tracked. And so we've gone into quality. It's over a year that we've been in a quality portfolio, large cap, liquid stocks with good, strong balance sheets, strong cash flows, strong brands, franchisees. So that is what overweighs our decision at this point in time. In terms of sectors, we like IT sector, pharma, media, very selectively private sector banks, telecom looks all right. But of course, we underweight other rate sensitives like auto or even capital goods, PSU banks, etc.
What's the view on banks then, which have sold off considerably? The bank nifty is down in the year to date.
Banks will have a tough run. Banks, as we all know, is the other side of the coin as far as economy is concerned. And banking index, I'm sure, is just reflecting the state of economy at this point in time. And I would expect the pressure to continue in banking, and hence actively selecting the right banks with strong balance sheets becomes that much more important. Pressure on NIMs as well as NPAs will continue across.
Are you booking profits in some of the consumer names, and what's the view on telecom?
Is neutral weight and overweight, but there the play is difficult because if you do not hold a couple of the large caps, the mid cap and small caps offer very few stories, and there the demand destruction and pressure on margins is much more than the larger players. So consumer is getting a tricky segment and sector to play in. In terms of telecom, there's obviously positive traction. Price increases have been taken up. In terms of data usage, there's a positive traction across companies. So the momentum is turned for the positive, but it will be impacted by news and political environment to a fair extent. Some of them have very highly leveraged balance sheets as well. So it's not a sector one would go completely gung-ho and overweight on.
Commodities and infrastructure stocks have fallen also quite a bit. Are you taking a contrarian view here?
They're badgered for a reason, I would like to believe, especially capital goods infrastructure. And I do not see a change or reversal in them in a hurry. Yes, they are very attractive valuations, but so for a reason. Till I see traction in the economy, till I see demand offtake, till I see investment cycle reversing, I would continue to be underweight these sectors. Nothing is changing in a hurry, and there will be opportunities to re-enter these sectors over time. So I remain underweight there.
All right, Ritu, we leave it at that. Thanks very much for joining us and giving us your perspective on the market. We'll take a break then. When we come back, get your quick update on BNS and the stock team.